What's up, team? Chuck with Traders War Room, and I'm back at you with another video. This is your Friday wrap-up, and I got a fantastic video for you. What I need you to do right now is I need you to hit that like, share, and subscribe button, and I need you to come along with us on the journey and check the description tab out. Tons of tools and tidbits right there at your fingertips to make you a better and more professional trader, and all the things Traders War Room products and services related right at your fingertips. Now, if that sounds good and you're ready to rock it with me, then all I got to say to you is follow me and let's go to war together. Traders War Room, let's get it. Welcome back, team. Legal disclaimer, this is not financial advice. The content is for entertainment and education purposes only. You're responsible for every decision you make. We want you to have fun, use caution, and always go to war. The services we provide, I'm not going to really beat this into the ground because at the end of the video, if you want to hear about the products and services we have, I got a little segment. But what I want to hit up is that you can explore everything we offer at traderswarroom.com. Stay tuned, like I just said, at the end of the video for hot products and services and upcoming classes, all in an effort so that we can grow, learn, share, and hopefully make some money. So, trade of the day, guys. We had a fantastic into the market day. We ended up getting into run and secured a first profit. Right there, 44 bucks a contract. Nova, fantastic swing trade. We ended up able to get 120 per contract off of that one. And CVX, this was a nice trade. We still got a couple open, or excuse me, one open contract, but this one paid the bills, guys, 236. And of course, XOM was booming as well. And we went ahead and secured some profit on XOM with that $190 per contract. Now, trades of the week. This is the big one, okay? We had a fantastic week full of just huge smashes, okay? Look at this, Microsoft kicking it in, boom, 340 per contract. We had Google smashing it, boom, came out of all position on yesterday's market and ended up getting $530 per contract at the highest. And the big boy, okay, the big mamma jamma, you ready for this? Look at this. Boom, with how Amazon just came into the market, guys, we had a huge swing trade over there. Entry 250, exit 1700, total profit 1450 per contract, guys. And that is, we are bringing you that fire, and these are just me, guys. I got 25 others on the server that are doing the same thing, making that money. So come and get some. I highly suggest you join the Discord or the instant messaging alert platforms and get some of these fire alerts that are making people money. Bottom line, we're destroying the market no matter which direction it goes. We hope you join us, and as always, we're ready for war, and we hope you are as well, and let's go to war together. Without further ado, let's get into the Friday wrap-up video. So here's how your markets close, guys. You got green across the board. Your futures last night were green as well, but we don't pay attention to the futures so much unless you're a futures trader until the market opens on the Sunday, where we get the futures for the Monday bell ringing. And there's your top trending stocks. Obviously, a lot of SPY talking, a lot of Tesla, a lot of AMD. The big boys are all talking about things. And then you got some of your monkeypox stocks as well making some moves. Here's a picture representation of the market. There's your ETFs. Here's the sector performance. We had energy taking a huge run into the sector, and that was basically because of CVX and XOM having fantastic earnings, just pumping the energy sector. Also, consumer staples and healthcare, they were the laggers, but also energy had some of that push on that inflation bill that's poised to go across the president's desk, I think, on Wednesday, and see if it gets approved and stuff like that. So definitely some high money flowing and some expectations within that bill. Here's your calls versus puts. Definitely looking a little bearish on the calls versus puts premiums, but there's still a lot of money flowing in through Tesla, Amazon, Apple. The big boys are always pumping both ways. Hot stock movers. Here's your penny stocks, guys. Penny stocks have been picking up steam and they've been doing their thing. So, you know, a lot of people don't like to trade penny stocks, and I can't blame you because they're extremely volatile. However, penny stocks offer you a great opportunity for cheap stocks that may move 5, 10, 15 cents, and they can get you a pretty decent penny. You go in at a 75-cent per share stock, you spend $1,000 and it moves up, you know, 10 cents. you're making some money. 52-week low stocks, guys. These are the top 10 stocks of each that have hit 52 weeks low and 52 weeks high. Definitely, we like paying attention to these because these offer us opportunities to either catch some cool down periods or catch some bounces. Oversold, overbought. Basically the same idea with the 52-week low. Things that are oversold usually are poised to go ahead and reverse, and the same concept with being overbought. You know, it's just we're looking for reversals. When we're looking at these stocks, we're looking for reversals, and we correlate it with the stock and how the market's trending and see if it makes sense for us to go ahead and hop in. And we got some unusual volume, some volatility. These are good when you're looking for ideas to get the things that will make a dramatic move. Okay, example, the PGY, you saw that stock just skyrocket. Okay, I saw it yesterday at the low, it was like around 15, 16 bucks, and then at its peak, it's 25 bucks. Guys, you can't beat that for these cheaper stocks when they're moving like that. If you can catch those trends, that's money. Of course, you know, you want to be able to get in and get out. So, you know, if you don't have the day trading allotment, you know, you might have to use one of your day trades, but you know, it's the risk versus reward. If you're able to get in at PGY, say $15, you buy, you know, 100 shares of that and you get out $25, that's $10 profit per share times 100. Definitely decent worth of your day trade. All right, let's get into some top stories. Okay, PayPal, Indonesia blocks Yahoo PayPal gaming websites over license breaches. So Indonesia has blocked search engine websites, Yahoo, payments from PayPal, and several gaming websites due to failure to comply with licensing rules, an official said on Saturday, sparking a backlash on social media. So we're definitely going to be paying attention to some of these PayPal and these fintech type of stocks moving forward going into next market week. All right, another top story, U.S. approves Boeing inspection rework plan, to resume 787 deliveries. So this will be something we'll be paying attention to. Boeing's been a fantastic stock to day trade here as of late, and so I got a feeling that we'll probably see some sparks of some bullish sentiment moving into Boeing as the story circulates. As long as nothing happens over the weekend, we'll be able to probably get some decent trades out of Boeing. And the British business turning away from China industry groups. And this one's important because China is embedded in a lot of stocks and a lot of things that move. And we definitely want to pay attention to the China market and see how that plays. If I had to bet, I would assume that maybe not on Monday, but once this news kind of circulates and people get, you know, a warm fuzzy on this one, we'll probably see some dumps in some of the Chinese stocks if they haven't dumped already. And they'll probably continue to go down a little bit lower with you know, some relief rallies, but ultimately lower sentiment going into them. All right, and the top story that I really want to hit, guys, okay? This one's going to be a little bit longer, but I think it's worth your while, okay? Whatever you're feeling about the stocks in a normal bear market, brief, and the worst is yet to come, okay? So what this is like the bear market was there, right? We hit bear market category, and now we've had this bullish sentiment. So a lot of people are turning away saying, you know, the bear market's over and the bull market is on. But I want you guys to be cautiously optimistic because let's pay attention to this. And this is a nice story, okay? So there's basically 5 stages within the bear market: denial, anger, bargaining, depression, and acceptance, all right? A lot of experts are saying that judging on where the market is currently after we did hit bear market territory, we're basically at the bargaining stage of this particular cycle where most investors move beyond, you know, they haven't seen the dramatic drop in the S&P, you know, or the broader market as a whole, and we're starting to see the bull push to the upside, so they're starting to get excited again. But analysts are warning you guys not to get too bullish because, you know, there's a psychological reason why we shouldn't take too much solace into quick recoveries from the past 4 decades, okay? Because a lot of anyone can take these information and kind of skew it for their personal reasons, all right? People just want to make sure that we're being cautious because if we are at this bargaining stage, we're like, you know, hey, it has to be done, right? You know, it didn't hit the 30% that they're saying in a classic, you know, type of bear market, you know, we're good to go. And quick recovery is always, if we don't hit below 30%, we usually recover within, you know, a few months or a few weeks, stuff like that. So that's kind of the bargaining idea that they're talking about. But people don't want to get caught in because the possibility to slice and dice historical data in many different ways. And they want to remind people that You know, you just kind of have to play the market for what the market gives you, okay? The idea here is that if we do go through this cycle, we still have some more downside because we're going to hit a buyer's exhaustion point, and then we're going to start seeing the selling. And when you start seeing the selling, what happens, what creates that cascading effect is we get the buyer's exhaustion, right? Things aren't booming anymore at the rate, so people are like, you know what, I should probably secure. And then what happens is trailing stop losses go, automatic trigger sales go, and then you get that cascading effect, and it just tumbles down. So just be cautious, cautiously optimistic on the bull side of the house. I still do personally think that we have some more downside, so just be ready for it. All right, now let's look into stocks and charts, and specifically the key stocks that shaped the market this week. And for that, we're going to go ahead and go in live into the platform that I like to use for this. And I want to talk about SPY. First of all, let's go ahead and talk about SPY. We're in SPY right now, right here, and we notice what happened with SPY this week. Okay, SPY had an absolute just banging week, and it broke out of its previous resistance point and just continued to just soar. And that was basically, a lot of it was on some decent big mega cap earnings that didn't do necessarily good, but they didn't do as bad as they thought. And what we want to focus on right here is that previously we were looking at this level as a basic shelf, and we were saying, you know what, if we break through this line, we'll probably reject it and come back down, which we did, right? We broke through, hit a point, and came back down to retest it, and then it took off. What we need to focus now on is around this area here, right? We look at this is a previous strong consolidation, you know, within range right here, right? And if we notice, you know, we got some top levels here, 417, we got the bottom levels here, you know, 407, where we already broke through, and basically we're about right here, we're at 412. And essentially what I am thinking is we probably got maybe a little bit more push, testing a little bit further, and then we're probably going to hit some of that rejection. If we don't hit that rejection, then it's off to the races. Okay, that means we're probably, the momentum's there and it's just going to go. But I do think that we're going to probably see that exhaustion coming in, because we're already seeing it. You know, volume is already starting to taper off. People are already bought into this here, boom, 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 right? Already bought into it, and we're starting to see a rotation in the market into other sectors, specifically energy. And I think that we're going to get that buyer's exhaustion coming in, and people that were in down here when they were buying on these dips, right, they're going to start profit taking and taking their money out to go roll it into some other things. So, you know, 415 to 417, I think we're going to see the push, and it'll be probably a strong rejection point where we'll come back down, and we will probably fall back down to retest this area here, if not this bottom line here, to see if we can truly hold this and if we're truly in the breakout. So those are the levels I'd be looking at for SPY moving into next week. But this is just a reason why the market pumped so hard, was because SPY was going because of these key stocks that we're about to go over right here. So one of them, Microsoft, absolutely destroyed earnings, and they just killed it. Okay, this was one of the catalysts that started off the week, right? So here was the week, right? Boom, and it just took off. 25, little leery. People, you know, doubted it on some of the earnings, right? They didn't do so. They didn't do as bad as expected on earnings, right? But people were just cautiously on it, so they couldn't win and sell. Then the next day, it just took off. Boom, 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 and it just ran through every previous early support level. We had support here, boom, resistance. It crushed it, went through, crushed that one, crushed it, and just continued on to the end of the week. And it was a fantastic trade idea that we had. 280 at the bottom. I do think we probably see a cool down, at least a retest of around 275, 274. So that's, I'll be looking for some bear calls on this one for a cool down to go back and retest this area to see if we truly can hold this. All right, Apple. Apple was so key, guys. Apple absolutely just destroyed earnings, and you know, this was one that everyone was kind of being cautious with, the Walmart, you know, the big juggernaut companies failing, and even Microsoft failing initially, right? Everyone was expecting Apple to kind of have struggles, but their earnings report at least didn't signify that they had much struggles. Went ahead and gapped up strong, and they pushed us. And guys, Apple has so much market cap that when Apple moves, it can draw the entire market along with it, which it did. Okay, now when we look out on Apple, okay, we notice that we do have strong areas of resistance that we need to be able to battle off. And I still think that we'll see a cool down period on Apple. I just don't see that we're quite ready yet for just a dramatic push, to go up into new highs, where our previous one was about in the 180s and stuff like that. I don't think we have the juice right now to go up there. So I'm looking for the pullback to retest this previous top portion of this gap that we have. Meta, disappointment on earnings, guys, and Meta just dumped. But I do want you guys to notice, Meta kind of finds this floor down here. Okay, it's done it before, and this is where it likes to bounce from. So I am optimistic on Meta at this point, where it's down here at the low, and I think we'll probably see rejection coming into the upside. It is still revered from analysts as a buy stock, because it is one of the stocks that are in a lot of portfolios and stuff. So we're definitely cannot count this out. However, they lost. I think they actually got kicked out of the one of the 500 richest companies in the world and stuff like that, and they ended up getting kicked out of it because they dropped below their 500 billion market cap, which is still a ridiculous amount of market cap, but they dropped below 500 billion of market cap. So we're definitely paying attention to this. They still are a beast, but they're definitely having some struggles right now. But I got a feeling that we're going to see this, find support down here at the shelf that we've seen before, and probably look for rejection to the upside. Amazon absolutely destroyed earnings. Everything was good on Amazon, the guidance, everything like that, the forward guidance, the idea, their AWS system is absolutely demolishing things. I was actually a little more onto the bear side on this one, and I got caught off guard on this one because they absolutely just gapped up super high. I mean, look at this. This is a gap from 122 all the way to 130, $7 gap, clearing all of these previous resistance points, and now we're looking for a new top, which we probably found it. We noticed that the buyer's exhaustion is starting to happen up here, so we'll probably see a little bit of a cool down period, probably retesting. I would wager around 132, 130, see if we can actually hold this area, but definitely a good showing, and this pulled the market along with it as well. Google did a similar thing. Google, when we're looking at the market and why the market moved, guys, it's because of these juggernaut companies. Now, Google's still trading in range. We can even draw, a rectangle box on this one, and it's pretty consistent, right? Boom. Okay. Google's trading within this range. Boom, 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 boom. So I got a feeling where Google will probably end up coming back up to retest these previous highs, where we will find our rejection point. So I'm looking for Google to probably push to about 118, 120 before we get the rejection, probably cool down period to the downside. And Shop definitely did fairly well on their earnings, and Shop is trading in a range too. I mean, we're looking at this here. We're in range below the previous gap down. And, I like Shop. We're about 50-50. So, when you're at a 50-50 point, you kind of make a rule, right? Put a little line there, and you tell yourself, all right, so you go in the middle, you kind of tell yourself, all right, so here's my rule. If Shop were to open above, say, 35.50, 35.75, I'm going to think that probably bullish calls to the upside, and probably potentially a run to go at least retest these previous highs that we have here. If we don't open and close above this area, and when we're talking about that, we're usually looking at a 15-minute chart. If we don't open and close, and we open or close below this line on a 5 or 15-minute chart, we'll probably think we got the bearish sentiment coming in. We'll follow the broader market, and we'll probably come back down to our previous level to test, which we've done multiple times, 1, 2, 3, 4, 5. I mean, you can see it right here, and we'll come back down to test our levels down at the downside. So that's it, guys. That's basically what shaped the market this particular week. The real key ones that were just absolutely smashing were all these mega caps here with Microsoft, Apple, Amazon, and Google. These ones push the market extremely, with tons of money, and a lot of the stragglers follow the coattails of the big boys, and that's exactly what you saw, pumping the market, closing extremely bullish into the week. So all right, guys, segment now, pro perspective. Topic we're going to talk about today is discipline. Consistency pays. All right, when we're talking about discipline, there's a couple things. We have to have rules for entry and exit, and these rules are based off of your trading personality and things. Example can be, if we're a momentum trader and we're using moving averages, we have rules. If I open above this line and I close on, say a 5 or a 15-minute chart above my particular moving average that I like, that signals me an entry point. And then having rules with the sub indicators to give the entry criteria, like where do I enter now as opposed to then and now. These are rules that we have. We also have to have the same rules when the momentum stops and I close it on my moving average, or my MACD crosses to the downside, or my RSI starts to push down, or I get a shadow bar on one of my histograms. That's an exit criteria. We have to stick to the rules. You gotta have rules when you're getting in and out of trading. If you just go into the trade because either you get a real-time alert and it's like, boom, buy this at this price, bam, and you're like, yes, this dude's on point, boom, I'm in. And then, the market dumps or jumps and it's going against your direction. That is your recipe for disaster. So we have to have some rules for entry criteria, because what works for us as far as our trading personality may not work for someone else. They might be trading off a different strategy that doesn't work for us. We don't pull the trigger on our trade unless the criteria is met, and that goes back to the rules. Okay, if we don't meet, I usually use 3 reasons why to push to buy. So if I don't have at least 3 reasons why on my particular thing, it didn't meet my moving average criteria, my sub indicators aren't there, I'm not getting into a trade. But my price action is there, my sub indicators are there, and I'm looking at it and I got 1, 2, 3 reasons. I'm not afraid to pull the trigger and go ahead and get in there. And that goes into the next one, not being scared to pull the trigger when the criteria is met. Listen, we're traders and investors. We have to sometimes spend money to make money, right? So we got to buy something. And if we have our rules and we back tested our rules, there's no reason to go ahead and hop in. Will we get some fake outs? Absolutely. That's just the name of the game. But we have our rules for exit as well. So don't be afraid to get into the trade when your criteria is met and pull the trigger. You've got to be able to watch the stock too that you're in, and you correlate the stock that you're in off the broader market. So usually a good idea, rule of thumb, if you're not using 2 charts, you need to start doing that. Say you're in a Tesla trade, right? You'll have a Tesla chart open, and then maybe you got a SPY chart as well. So a Tesla chart on the 5-minute, your SPY on the 15-minute, and you're watching the trend of the market, because Tesla can move the market as well because it has a high market cap and it's extremely volatile and very popular. It can move the market cap as well. So if Tesla's moving up, you look at SPY on the 15-minute, you see if the trends continue to go, and it can kind of correlate your idea on multiple time frames and utilizing multiple tickers that kind of correlate together. Sticking to your rules for entry and exit, and this is where the discipline part comes in. It is so key. You have these rules for a reason, right? If one of your rules is, if the stock dumps 20%, I'm out. Now, a lot of times I hear people utilizing this 10%, 20% rule when they're trading options. Guys, that's, hey, by all means, stick to your rules, but I think that you need to redo a different type of strategy when doing that, because if you're in, like, say, a Tesla option trade, and Tesla's trading within a range of, say, $45 to $75, like it likes to trade, Tesla's going to bounce and jump all over the place, and you're going to hit your 20% stop losses a whole bunch of times. Okay, so you may need to look more at the chart and have rules based off of price action that's moving, and not so much the percentage of your contracts and stuff. I just need you guys to understand that if you're going off the percentage of the stock, and you have some rules, like if the stock dumps, more than, you say, like 1.5 or 2%, now we're getting into that. Okay, that can be exit criteria. But I see a lot of people, and I get a lot of DMs like, hey, it hit my trailing stop loss, or my stop loss triggered at 20%, and as soon as it triggered, it just took off and run. Well, that's why we need to watch the stock and pay attention to it. Okay, a lot of these automatic triggers are great for newer traders so that they can preserve capital, but once we kind of understand what we're doing, we have to use a lot more of us watching them and making the right decisions based off of momentum, price action, and the trend that's going on. And I want you guys to understand risk versus reward and tolerance. Okay, so once again, we kind of go into, there is the risk worth the reward in terms of what can I get out of this that I'm putting in, and the risk tolerance. So if you're risk adverse, then you're not wanting to trade a Tesla because it's extremely volatile. If you're risk adverse, you're not wanting to do lotto earning trades. Okay, you're wanting more stable things, and you need to understand, you as a trader, you need to understand your trading tendencies, your risk tolerance, and your emotional side of the house as far as how it relates to putting money into the market and coming out of the market. Also, the time frame that you can watch the market too. If you're one that can only swing trade and you're getting into these volatile stocks, you may need to look for different type of stocks because you don't have the time to look at a stock that is volatile and is queued for making a dramatic move either up or down. So just paying attention to that, guys. Just a pro perspective on discipline. Just understand, big takeaways is just having rules for entry and exit points, having risk rewards that go along with your risk tolerance, and having an understanding of your trading personality and your availability to trade as well, so you can make sure that you're always being consistent. All right, and that's the video, guys. Invest in yourself with 2002 with Traders War Room. We want you to quit wasting that money that doesn't make money, guys. Stay tuned for hot upcoming products and services. Grow, learn, and share, and hopefully make some money. And guys, if you're done with the video and you don't want to find out what we have to go ahead and stop the video now. And you know what? We're fire, what we're bringing, and let's go to war. And hopefully we see you on the Traders War Room website. Otherwise, with everyone else that wants to keep going, let's get it. All right, upcoming, we have a price action for directional day and swing trading class, 7 August, 1 p.m. Central Standard Time. $15 will get you a seat. You get to keep the recording, and you're going to learn what price action is, how to find direction for your trades, and entering and exit for profit and price action. Basically, kind of what we were talking about. Okay, only this is going to go specifically off of price action trends for entry and exit criteria, and I'm going to teach you a couple different indicators that you can utilize with price action that really give you a great execution for entry and a great execution for exiting as well, so you can be consistently profitable. I hope to see you guys there again at 7 August, 1 p.m. Central Standard Time. You can book your session and register right there on the website, traderswarroom.com. Upcoming classes, and we want you to build your battle plan with Traders War Room. Next up, some services we provide, guys. We got tons of services, free and paid services, real-time buy and sell alerts, live trading, one-on-one mentoring, trading classes, a fantastic community. It goes on and on and on. We have 25 real-time alerting analysts and AI trading bots, all kinds of styles, stocks, option, crypto, forex. I need to update this because we even got sports betting in there, long, short, day, swing, leap, spreads, you name it. We have something for everyone, every style, every budget, and we want you to come get some with us. One-on-one mentoring, very popular right now because a lot of people, as the market is pushing, they want to learn how to really refine their strategy and their plans so they can start making some money, not relying so much on the alerting. They want to learn when to get in and get out because they're seeing opportunities and they may not get the alerts. And they're like, dude, I could have got this right here, but so-and-so didn't alert. They want to do it on their own. We can get you guys there, okay? Develop skills, gain confidence, receive guidance, refine strategies, get a pro perspective, explore new plans of attack. Guys, check us out. Book your session today. You can book it right from the website, traderswarroom.com. And I hope to see you guys on the mentoring session here soon. Instant messaging platform. If you're noticing the platform that you're trading on right now and receiving some real-time alerts, it's kind of noisy, maybe cloudy with a bunch of dings and pings of other stuff you're not interested in, try our instant messaging platform. Less noise, just alerts, guys. And you got the link right there. It's the bottom link on the page, the Traders War Room bot. You go through this through Telegram. It comes through like a text message or an instant message, and basically we're just putting it out there. There's 2 rooms. You got a channel for alerts, and you got your own private lounge that you can connect with the other members in there as well. You don't have to connect with them. You can just strictly go off the alerts, but we have the lounge so that you guys can connect with other people and bounce ideas off as well. Basically, it's another community right there to have like-minded investors like yourself and to go trade with less noise and just alerts. And we want to talk about our upcoming historical classes. We already gave you the upcoming class 7 August, but we want to talk about our historical classes. Various topics to become a total investor, trading strategies to become lethal trader, perspective from pro traders on proven tactics that make consistent wins. And we have a whole bunch of classes that we've been putting out. Basically, about every 2 weeks, we put out a class. We do it live, and then we put the live one onto the historical site, so people that didn't purchase the upcoming class, they can go on there and get the class whenever they want. Check it out, guys, because again, every battle needs a plan, and we want you to build your plan with Traders War Room. And upcoming, guys, the week of 29 August, we have our next installment of the Options Trading Fundamental course. Guys, this course has gone off like a storm, okay? 6-week course, 2 sessions per week. It's like a college university. We had a professional websiter build a website just for this class, guys. And we hooked up with Elite Option Trading to bring you this formal education on options trading from the cradle to the grave, guys. It's a little expensive, but it's because it's a formal course, okay? You're getting 6 weeks of courses, 2 classes per week, and you got the option to have some one-on-one mentoring coaching about it. And it's everything from the very beginning, how to trade options, all the way into advanced options. And it's right there live via the Zoom. But we also have payment plans because we understand that, you know, $500 is expensive. We have payment plans so that you can make a payment plan. You can get into this class. All the class sessions are recorded, and the idea is to take you from a good trader to an elite trader, okay? And if you want to inquire about this one, because we don't have this on the website yet, because our class 1 is still going, we're going to put this up about 2 weeks before the end of class, but our registration for this is going to start 22 August, and you can always inquire at traderswarroom@gmail.com for details, and we'd love to have you over there. And we have some real great testimonies from the people that are on it currently, and they're loving it. And give you one idea, we had an education, someone that was a teacher, she's on it right now, and she said that the platform that we have for our virtual classrooms was better than the education platform that they were using for her middle school. That speaks volume, guys. We really put a lot into this to make this a very professional and a very good site for people. So I hope you take advantage of this. And at the end of the day, we want to thank you and come and ask you to come trade with the bulls at Traders War Room. See what we're offering and what we're doing on the web and social medias. You can always go to your favorite social media, type in @Traders War Room, and see what we're doing over there. All the videos like this video I'm going to put on YouTube, on TikTok. We got a lot of stuff going on, guys. So as always, remember, we look at the stock market like a war zone. Stocks and sector, those are our battles. We do it together as a team. Attack, conquer, destroy, and we're always going to war. If you can rock with that and you want to get on the team, all I got to say to you is follow me, and let's go to war together. Traders War Room, guys. Have a great weekend. Have a great day. Let's go out and make some money on Monday.